What is going on, everybody? Welcome to another episode of GLE. Phil Swanson here, back again with another amazing episode for y'all. Today, we're talking Bitcoin with a buddy of mine and another new buddy of mine. I got Sergio Fernandez and Maciek, a.k.a. Mac, who are coming to you live from the Swiss Alps. And I'm really excited to talk to these guys today because we have been talking about Bitcoin. Sergio has been trying to convince me about Bitcoin for a while now, and I did an episode kind of talking about my thoughts on a video related to Bitcoin recently, and so we'll consider this part 2. And I'm here to learn from these guys who are doing some big things at Bitcoin right now. So I'll pass it over to Sergio to introduce himself and how he got into Bitcoin a little bit, and also his partner over there, Maciek. Sergio, what's up, my man?
What's up, Phil? Thanks for having us on.
Yeah,
Glad to be. But yeah, how'd I get into Bitcoin? I think I had a buddy back in 2017 introduced me to Bitcoin. I'd heard about it, but didn't really know much. But I had a buddy who took the time and explained it to me, and I just dove deep and read all into it. And of course, I started investing in it when Bitcoin was 20,000, the all-time high at that time, and watched it fall for the next year or so down to 3,000. But I felt really strong about it, and I really thought it was a good investment. It was the future. So I kept buying, and then it ran up to 69. Then here recently fell back to 15, and today we're probably like at 48. So I've been here in the space for a few years now, and I feel like I really know the market. I really believe in the fundamentals of Bitcoin. And that led me to Bitcoin mining. I didn't really think about Bitcoin mining much, but I met another guy, kind of taught me the fundamentals of Bitcoin mining. And I was like, man, that's a really good idea. Create some Bitcoin, just have machines running, generating Bitcoin. I love that. No employees, no labor headache. Let's just buy some machines and generate Bitcoin. So I jumped on, and that's how I met Maciek. We went down to his site in Baytown. He had you've got to have these Bitcoin miners at a specialized place where you get low electricity. So that's how I ran into Maciek. Bought some machines, put them at his warehouse. Started talking to Maciek. Was starting this company up. I saw an opportunity where I wanted to be in Bitcoin space more. So I invested my money into Sattva, and for the last little over a year, we've been running. It led me to meet Maciek. Now I'm here in the Swiss Alps, just having a good time. And yeah, that's how I met Mac.
Awesome. Mac, what about you, man? Tell us a little bit about yourself. How'd you get to the Bitcoin world?
Yeah, thanks so much, man, for having us and for being here. And for me, it was even later a little bit. So I remember the first exposure I had actually to Bitcoin mining was back in the day, I would say 2015, 2016. I was in New York City, and a friend of mine, we were walking around. He's like, hey, in Brooklyn, there's this huge warehouses where they mine Bitcoins. I'm like, what? And I was like, kind of like missed. I was at that time, I was heavily for my entire adult career, I was in commodities. So I was working in Africa, and I was like, that's not for me. And then COVID came, and I was laughing as Sergio was saying, I bought at 20,000, it went down to 3. My experience was opposite. So COVID started, I stopped traveling. I kind of like relooked at my life, and I saw Bitcoin hitting 3,200 on I think it was called Black Thursday. Whenever they announced all those lockdowns, and in Europe when the world shut down, basically within a couple of days of that, Bitcoin was in like 3,000 to 4,000. So I was just sitting at home, and I bought some, and then I bought more a couple of days later, and then as I just said, like 8 months later, it went to 600, and I was like, that's something I want to be involved in. Like that's something I want to do. That's like, in the meanwhile, of course, learn the fundamentals of why is this the future. I completely became, red pilled basically, in a sense that I convinced myself. And I was trying to look. I was looking for opportunity and kind of leveraging out my experience that was in industrial operations. So in Africa, we've been mining on industrial scale minerals. Power is always something I was really comfortable with. So I had some money and started looking where to where to invest. The catalyst for me to go all in was July 2021, when the Chinese banned Bitcoin mining in China. What that caused the network dropped basically by 30% in a day, and there was the period of time which I kind of managed to jump on that bandwagon at the very, very late. At the end of this, there was a lot of Chinese companies that ended up with all this equipment that was illegal to run in China, and they were looking for spaces.
Mm-hmm.
So that's how I ended up in Texas. I was looking into Alberta and Canada, and Texas is two prime locations for Bitcoin mining, and then the opportunity came along in Texas, and that's how I started there. And yeah, and we're like taking a lot of advantages of being there. Texas kicking ass in oil and gas, so there's lots of energy available, and we feel very, very welcome as an industry there. And yeah, that's how it started for me.
Well, welcome to the show. Great to talk to you guys. I know a couple things that kind of stick out to me there. One, I wouldn't call myself a Bitcoin believer at all by any means, but I'm not a US dollar believer either. And I think anything not US dollar right now is a great idea. And the fact that governments seem to not like Bitcoin, to me, is a huge point in its favor of why it might be a really, really smart thing. But I'm here to learn from you guys, because I've kind of written down some like benefits and potential risks that come to mind when I think through Bitcoin, and some of the arguments I've heard for and against it, and some I think are good, and others I question. But it's interesting that y'all pointed out Alberta and Texas, which are the two energy capitals of the U.S. and Canada, as great places to potentially mine Bitcoin, obviously, because you need a lot of energy for it. I'm real curious from y'all's perspective, what sets Bitcoin apart from any other fiat currency? I mean, you're mining it. Yeah, you got software behind it. It does have that limited quantity, but help explain for the audience, and I'll pass it off to either of you that wants to start. How is Bitcoin really setting itself apart from a traditional fiat currency?
Sergio, you want to go for it, or
you can go ahead?
I just want to make reference to what you said about initially about fiat, and just a little kind of like a perspective that for me was something really interesting, is that when the world kind of switched away from barter initially into like gold standards or silver standards, when people were exchanging not really notes, but they were exchanging physical objects that had valor in them as such, which was gold and pretty much gold, copper, gold, silver, salt at one point, like depending on which time of the history. So it was kind of like Bitcoin. It was finite. It was limited. There was, of course, like it was controlled always by like different. It was different dynamics, but there was some sort of kind of a coverage and value in terms of like what was exchanged. When the world turned around and went away to basically paper money, and the link in between the value of the note, the physical value on the note, became irrelevant. In a sense, it's just a human agreement that $100 bill is worth $100 because it's been for so long around that we kind of believe that that's the case. But at the same time, like with what happened a couple of years ago during the pandemic, this was like, for me, in terms of like the belief of understanding why the advantages of a blockchain technology will overcome eventually the legacy systems that we have here, is that you can what happened basically with inflation because of all of this money being printed and the government just going on a basically crazy splurge of printing as much as they want, covering everything they want, and just increasing the debt without people ever even agreeing to this. I think this is what sets Bitcoin apart, because Bitcoin in it's all its novelty, it's still pretty much is always the same. Like, people agree that has a value, but given that it's finite, the technology behind it, and it's finite supply, more and more people, by people I mean like individuals and companies and the governments as well at that stage, like, of course, more or less are kind of turning. They don't like it, but they understand they cannot stop it, because for me the most important part of Bitcoin is actually the blockchain technology, where what I strongly believe, we're living in a cusp of times. We're very lucky and fortunate that, in our Western world, we kind of count the time for 2000 years since Jesus was born. That was like a huge event, and like our world is defined by it. I do believe that if you look in for 500 years from now, the moment where it was pre-digital, so what had to happen was internet first. The internet happened first, and then with widespread internet and connectivity, the technology came second. In this case, blockchain technology, ledger technology, which is immutable in the sense that assuming that the power don't go down, and there's no cataclysm that kills all of the internet and all the power in the world. In 500 years from now, every single Bitcoin transaction is going to be able to be traced to the beginning of time, because that's basically how blockchain is built. So the trust factor, for me, it's the one that really sets it apart. That at this stage we don't really see it yet, because there is the stocks and Bitcoin kind of are quite correlated. So basically, if there's cheap money on the market, Bitcoin goes up. And if there is less money, Bitcoin goes down, and it's been kind of the pattern of the previous years. But all of the believers and the people that invest heavily, and that's a lot of people, a lot of companies, they do believe that at one point there's going to be a catalyst event after which it will decouple. So we will see interest rates, basically stocks going down and Bitcoin going up in the moment that, like, when kind of like a public trust to the system is going to break. So and that it can become, and likely will become, uncontrollable, in the sense that then really sky is the limit. Like, I'm sure you heard different predictions of pricing. So that's what it's based on, on saying that when enough people says enough is enough, that's bullshit. Like, the system we live in, we need to switch basically, and here is already technology that is ready. So for me, this is the key points.
Yeah, I like that. I mean, I 100% agree that the system we've had is not working, never worked, was really designed to enslave people, right? Like, just thinking about how you give away the power to just generate money out of thin air to people, they can really drive any agenda they want, right? Like, if you have unlimited money supply for free, like, you can pay off whoever to do whatever and really drive any agenda around the world, which it seems like folks have been doing for a number of decades. I'm curious if maybe a good approach might be to dive into some risks or concerns, because I want to hear y'all's opinions on some of the things that came to my mind when I'm considering investing in Bitcoin. I've heard it kind of referred to as a real estate metaphor. It's like digital real estate. I kind of almost think of it like domain names, right? Once you buy a domain name, it appreciates potentially, right, over a long period of time. And it seems like Bitcoin long term, since it's limited value, I don't really picture a lot of people transacting with it for day to day per se, but more just holding it as a piece of real estate almost. Am I way off there, or how do y'all think of Bitcoin as potentially some type of digital real estate type of asset? Maybe pass off to Sergio to go first.
Yeah, for that, I mean, that's the biggest for me. I see it as the hardest asset more so than a currency. Like for me, I choose to keep my savings and wealth in Bitcoin. I'm not looking to go buy everyday things with Bitcoin. Like I'm not gonna I don't want that. Like I'll always use the dollar for that. And Bitcoin just being a super scarce asset, I think it takes a long time for you to grasp it because yes, like it's on the internet, can't touch it, you can't hold it. But once you grasp it's the scarcest asset possible, then you really start to see, I think, the real value in it. Because I can see it a bunch of different ways. In real estate, yes, I'm sure you've heard, it's like buying prime real estate back when everybody could buy all the prime real estate. Yeah, you could definitely see it that way. Or, you could see it as gold, but it's better than gold because, you don't have to store it. You don't have to worry if it's fake or not. You don't have to transport it. It can't be seized, like when the U.S. government seized all the gold back in the 70s, 60s, 70s. That can't happen. You could have Bitcoin and nobody knows you have Bitcoin, and you can just hop up and leave one day and go across the world and just pick up financially because you've got all your wealth in Bitcoin and nobody can stop it. I mean, literally, people don't have to know that you have Bitcoin. So for me, that's what I'm here for. The scarcest asset, the hardest asset. And, the older it gets, it's 15 years old now, the better it becomes as an asset, right? Like we buy investment properties, not because we want a bunch of houses everywhere. We buy them to store our value and watch it appreciate. That's why most investors buy real estate. And you can get loans on these things, right? So you buy it, now you've got equity, you can refinance it, pull money out of it. Well, Bitcoin growing up and rules changing, you can already get interest. I mean, loans on Bitcoin, but the interest rates are going to go down. In the moment you can get, the same type of loan at the same rate on Bitcoin as you can on a house. I mean, it's just obvious. You don't want to have a property where you've got tenants you got to worry about and make sure they're paying, they're not damaging your property. Or you can just hold this asset that's on the internet that just sitting there and appreciating every year because more and more people know about it, learn about it. And again, like once it just starts running, you can't just produce more. Like gold, they say, if gold starts running, then a lot more miners that weren't profitable start kicking on to create more gold. Bitcoin, it doesn't matter how many people want Bitcoin. The algorithm says, every 10 minutes or every so many blocks, the system kicks out X amount of Bitcoins into the network. And that gets halved every 4 years. So, it's about to be half the Bitcoins coming into the system here in April. So there's less supply with more demand. And the ETFs being in the system now, they're eating up I think the last stat I read was 500 million in Bitcoin a day they're buying net because there's some back and forth of other ETFs having to sell and things like that, but that's way deeper. So for me, that's what it is. Just the hardest asset I could possibly own. And that's how I see it.
Yeah, I agree basically with everything that Sergio said. On top of this, I just wanted to add is that the independence, like for me, what you opened with, that you have in the government you elect, or that's what you think at least, a bunch of people, and you give them the rights to kind of decide your fate in terms of we live in the world that is underpinned by money and materialistic world. So it's a one of the key components. With Bitcoin is not like this. So the appeal you're saying as a store of value. I see the store of value, and for me, it's what makes me feel comfortable is seeing billions of dollars of investments that even the big banks and the high street people, even then they might be on one hand coming across as skeptical. On the other hand, they absolutely make sure they're going to get a piece of the pie. And we as a service provider as well, because we mine Bitcoin for ourselves, but we mine Bitcoins for people, for clients as well. So we are as Sattva connected with different even the biggest North American producers. So it's kind of still a close knit community of the manufacturers. It's probably few hundred people, but few hundred companies that are like at scale doing what we do. It's ever more, of course, but and when you realize like who is behind and how much money is being invested in infrastructure in the future, and like which if you look at the price of Bitcoin of $40,000, you're saying like these guys will never make the money back, because like it's just with the halving coming up in a couple of months. So this paradigm change, even though it's maybe not mainstream, has happened already, and as we having kind of like in like maybe in more privileged information being part of the game, this is what convinces me that it's a good choice, because the fundamentals of this being uncontrollable, and the fact that you would have to gather 51% of all the miners in the world to make any significant change to Bitcoin, which is simply not possible technically, because unless some sort of like quantum computer comes and hacks everybody, like things that is not available, and there's no technology at the moment that is not widely accepted, you can't seriously consider that you can have thousands and thousands of people agree in complete silence to do something that would just impossible, because the hash rate is not even concentrated in one place on such a scale. America is, I believe, in the 20s, and I think is the biggest at the moment in terms of the hash rate of the world. China was by far the biggest. It was in the 40s at its peak. They still mine there, but like small amounts. There is Middle East guys, there is South Americans, but like it's very well spread out. So you have it in Russia, you have it in Ukraine, you have it in, it's like connecting the people in the sense that everybody's doing the same thing. And yeah, and for me, this is the scarcity, the fact that it's so scarce, and the fact that like it can't be simply modified and like reversed, which is in opposition, for example, to different cryptos. I don't know if you follow, there was a couple of years there was this huge theft of Ethereum, and that kind of showed for us, for me as well, like showed me the way. What is the difference between Bitcoin and every other coin that is existing there? The technology here is not changeable. Ethereum, on the other hand, there is people behind Ethereum. So there was a theft. I'm speaking under correction. I believe 200 or 300, like few $100 million theft, and they reversed the blockchain. So basically, they having the control of the 50%, they said, "Hey, let's just reverse it. Let's go back 6 hours to reverse all this transaction of stealing, and then pretend it never happened." Basically, so this can happen in Bitcoin. Like it's just not possible. Like it's never going to happen, because there's nobody to go to and knock on the phone and call, "Hey, bye guys, like they stole me 300 million, can we get it back?" Like no,
right.
that's not going to happen. And this is what differentiates it from other cryptos, and the utility of it, like as much as Ethereum and smart contracts and basically like everyday life applications, and there is like millions of them, and starting from a very on the ground things that we all know, like logistics, like insurance, like things that are like normal up until the metaverse worlds, when you have the virtual realities where it happens as well. All of this ecosystem of various cryptos has a different use study and completely different case. Basically, what they're actually usable in making things easier. In Bitcoin is kind of like more of, as I just said, store of value. Like it hasn't become yet one for everybody, and where we are here kind of still early. We're not probably the early adopters, but still we're early enough that we're saying, okay, it will happen in a foreseeable future, that the mindset will change, that it is a store of value just as everything else, and then really sky's the limit.
So I got to ask a clarifying question, and thanks for your patience with my ignorance. So the fact that it records the transactions and can't be changed, this blockchain. I always thought a benefit of it was you have this perfect record of transactions. And then when I hear people talk about it, like yourselves, it's like no one's going to know I have Bitcoin.
Well,
no one can steal my Bitcoin.
That is only to the point, man. That is only to the point. Sorry that I'm interrupting, but this is like when you say no one knows, it is because you maybe have minded and you haven't ever moved it anywhere. So in that circumstance, nobody knows because it's public. Everybody can see that on that address there's X amount of Bitcoins. But given that this Bitcoins didn't go anywhere, so they're not linked to anything that can be linked to a person or a company. Because what happens if you have Bitcoins, you want to pay for something or you want to change them into different crypto, you either go to a crypto exchange that has KYC, and if somebody really wants, can say, okay, this address can be traced to address in Coinbase or whatever the crypto exchange, where else there is probably some way already to find out who owns which customer of Coinbase is this linked to. So that moment it becomes public, but you can keep it very private if you want. But really not really moving it a lot. So that is I think that must be clarified. If you want to start moving it and doing things with it, sure. It doesn't. And then, it doesn't matter if it doesn't sit for 10 years, then the moment you start moving it, the 10 years of record is for everybody to check, it's been sitting here for 10 years.
Okay. That makes sense. That helps. So another thing that comes to mind as you're talking is the fact that, it can't, I heard kind of the comparison. Somebody stole Ethereum or people took over the Ethereum. And I know some people have had experience with getting some Bitcoin stolen. So I just wanted some comments from either of y'all on like, for the newbie who's thinking about getting some Bitcoin, how can you do it the right way where you're not getting things stolen, you're not, getting hacked? What's the best way to protect yourself in this world where there is no recourse, right? If somebody takes your Bitcoin, there's not like some agency that I'm aware of that you can call that are going to go hunt these people down.
Yeah. So to that point, the best way to hold Bitcoin is what's called cold storage, the cold wallet. So basically, your coins aren't online. Well, they are, but they're not on an exchange. The way most people get hacked is through having their money on an exchange. So if you've got your money on Coinbase, it's online, so someone can steal your identity, go to Coinbase and say, hey, I'd like to transfer my coins, and they transfer your coins. That's the easiest way to get hacked. But if you've got it in cold storage, you've got your seed phrase. I'm sure you've heard of 12 to 24 words. You got to know your wallet address.
Mm-hmm.
Can't be hacked that way unless somebody knows your exact wallet address and your 12 or 24 word phrase.
Mm.
So, as long as you don't give that to anybody or take a picture of it and now it's online, someone can hack your phone and they're super smart. They know how many Bitcoin you have. They know everything. Like, they know, okay, I need to get his wallet address and his 24 word phrase to get into his wallet. Because these cold wallets are basically keys into a vault. Your vault is online. That's your Bitcoin address, your wallet address. You need these 12 to 24 words, or, they're called ledgers or other hardwares that you put onto the computer to verify, hey, that's my account. So if you never give up those words, you're never going to get hacked. And, now it's even easier with the ETF for the everyday person. Like, you're not like here because, hey, I'm trying to fight the system. I don't want people knowing what I have. Like, I just see it as an investment and I want it to be safe. Then I tell you, go buy an ETF. Like, it's just like a stock. You can't steal your stocks, right? Like, I would say just go get an ETF. But if you're like, a hardcore old school Bitcoiner, they want you to be on a cold wallet. For me, it's like either or. I see the ETF just as good as having Bitcoin in cold storage, except if, the government rogue and like blocked you from getting your stocks now, then that's a different story. But, I'm not that deep in like, hey, we're super corrupt, don't have anything online. Like, I tell everybody that's the best way to get a Bitcoin is go buy the ETF. Like, it's super easy, super, I bought ETFs just because I never owned stocks, like never ever. When the ETF came out, I downloaded the app, went and bought some just to know exactly how it worked, get familiar with it. And with those ETFs, I mean, again, I'm not very experienced in owning stocks, but I know you can get loans on them now, and you can do the derivative trading with them. So again, that just opens up a whole nother market of Bitcoiners now who will learn about it and be in the space and throw a great amount of money. Like, Bitcoin's not even $1 trillion. It might be $1 trillion asset today, but like barely. These Black Rocks of the world have, hundreds of trillions of dollars under management. So just a 1% allocation to Bitcoin is already double the current market. There's Fidelity, there's all these other ones. So again, and that just goes to the potential. There's just so much more room to grow. And the more accessible it is to everyday people, if you can buy it with your 401k or your Roth IRA, yeah, it's just like a stock now. I'll throw some money towards it. And, you hold it for a year and you watch it run 100% one year. Now you really want to know, like, what is this Bitcoin? And from there, they go down the rabbit hole. And, it's very rare if you spend, a good amount of time, like, really just digging into Bitcoin, that you're like, I don't believe it. If you put in the time, I've never really met someone who just like, dude, I read all these books. I spent, 50 hours just going down the rabbit hole. It's like, I don't believe it. Like, it's a scam. Like, they might say, oh, it's not for me, but they're not like, hey, it's not what it says it is. Like, that's the thing about Bitcoin. It's just very transparent. And, with these ETFs, a concern I have with stocks is like, there's a bunch of paper stocks out there. It's like, for every company, I don't think it's really held to how many stocks they say are out there. I've read stories in the past where they do an audit for whatever reason. There was way more stocks in circulation that there were actually for the company. Mm-hmm. With Bitcoin, if, BlackRock holds an ETF and they say they have 100,000 Bitcoins, we can go look on the blockchain, in that transparency, and see, hey, BlackRock's wallet shows that they have 100,000 Bitcoins. So that's legit. So I think that's what keeps us from the paper Bitcoins. And I hope, because that is definitely a concern with ETFs, like, hey, they can just make paper Bitcoin now, then that's really going to affect the flow of Bitcoin. So time will tell. But yeah, that's the safest way to not get hacked. Get a cold wallet or buy an ETF.
To that point, if they can just make paper Bitcoin, I mean, aren't we kind of venturing into the world of fiat at that point, where it's not a limited quantity?
Yes.
Right. Yeah, but listen, guys, this is just intrinsically not possible to happen, because the way, one thing interesting to kind of understand with the cold wallet, I remember my first experience as well with cold wallet. I use the same exact system. And so I get the cold wallet, it looks like a USB. I get the Bitcoin on the first Bitcoin on the exchange, or Coinbase or Kraken, or I can't remember exactly, or Binance, I can't remember. I get the Bitcoin, immediately I transfer it out. It stresses you out because, for like 40 minutes, you don't see it like come in, like depends how long it takes. So the first time you do it, it's like a little bit nervous because, you confirm the transaction, you check the address, and but the understanding that that's exactly as Sergio said, it's a vault. It's a key to the vault, basically, because it's not that there's any Bitcoins on that particular wallet. There's nothing there. It's just the access point to that Bitcoin address. So the Bitcoins will always stay. That's why there's estimated, I think, around 4.5 million Bitcoins that has been lost, in the sense that they have been on the addresses. You can track them. People know which addresses they are. They are sitting there on the blockchain. and there hasn't been accessed for 15 years or 12 years or 13 years. So assumption is that those addresses is just the keys have been lost to them, and people can access them. So meaning the effective supply of Bitcoin of 21 million that is widely known, realistically it's probably going to be around 15 million Bitcoins, that 15 to 16 million Bitcoins, because there's a part of Bitcoins that are just gone. And you can't, you know how it works, it's every hour, I believe, or yes, it's the blockchain distributes 144 blocks, and then in those blocks, there's every transaction that ever happened since day one till that 8 minutes is being recorded. So then when the new block comes out in 8 minutes, everything that happened up until the previous block plus whatever happened in the last 8 minutes, it gets recorded there. So it's not that there's like an older database or newer database. Like when I got into this, the Bitcoin network, if you wanted to run your own node, so store all the transactions on your own computer, it was like 4.5 gigabytes or 3.5 gigabytes. So you could run it over a regular computer. Right now, 3 years later, it's still less than 10 gigabytes. So it's not, and every single record or every transaction that ever happened up until 8 minutes ago is there, and it's being repeated every time. That's why they say that you cannot corrupt it backwards, because if you can go and check timestamps every 8 minutes for 15 years, like, and something is just off in between one and another one, then clearly it's not legit. Something is fake. You know what I mean? So you just can't modify that, because you would have to go to millions of computers in the world and the nodes, and somehow in technology all at the same time modify the record that is on all of them, and that's just not possible to happen. That's why I said, like, unless we have, like, you know, quantum computer AI based that can just do all of it, it's not like blink of an eye one day, but up until that happens, it's just not possible.
So tell me about Bitcoin mining. This is something that I'm not super well versed in. I know both of y'all are investors in it, right? So I guess my question is, what exactly is Bitcoin mining, and what does the business model look like? Like what type of investment up front, ROIs? What does a Bitcoin mining business even look like?
So in general, it has evolved very significantly. There is the Bitcoin mining is, in short, there is the algorithm that has a certain, it's called SAH 256. It has certain, like, equations that must be resolved basically. And now there is each of the Bitcoin mining computers it started in like 2011. Like at the very beginning of Bitcoin, you could do it on your own phone, on your own computer, your own laptop, or at home, because you needed the total amount of people doing it in the world was so tiny that your computer could cope with this. This came to an end in 2015, basically just before the previous halving, like 2 halvings ago, with a Chinese company that was like, listen, wait a second, why don't we just make a computer that is optimized to doing just that? So instead of being a computer, versatile computer, which you can, like, you know, watch YouTube or whatever, like a computer, they designed the chip and say, hey, let's just make the computers that do just that. Now, interesting as well into, because it's based on chips, one must understand as well that when it first started, and I always use the comparison of the newest Apple iPhone, like iPhone of 2015. If you compare the chip quality in the iPhone from 2015 and the chip quality of the Bitcoin miner, the first professional Bitcoin miner came out in 2015, it was like generations apart. I don't want to say, I believe it was like 150 nanometers for the Bitcoin machine and 15 or 12 for an iPhone. I can't remember, speaking under correction, but this was a major difference. So what happened over the years, we had this crazy growth. So every 6 months or every year there would come better chips. They would improve the quality of chips, which basically made them smaller. Smaller chip eats less power, doing the same job. And now, fast forward 7 years from that time, there is basically no lag. So the newest iPhone that you can buy right now, iPhone 15, and the Bitcoin miner that came out in December this year is based on the same 3 nanometer technology, the newest tech. Now, so this race kind of is about to end in approximately 6 years from now, because it's known that the 2 nanometer technology is being in development. It's probably 2 years out, 3 years out from now. Once it comes out, the efficiency is going to drop again, so it's going to increase. They're going to become more efficient. But from there to go to 1 nanometer technology, it's a long way. Apparently, this is technologically, we're not yet there to make things of 1 nanometer size. So there's like the market of the Bitcoin miners is expected to kind of plateau a little bit for in a while, because like it's been that every 2 years, or let's say every 4 years, every halving, it would basically halve. So when the previous halving was out there, the efficiency of a Bitcoin miner, so for one unit of production, it's called terahash. So for 1 terahash, the newest generation unit in 2020 was eating 29.5 watts or joules to produce 1 terahash. The miners that came out right now, so they actually literally copy 4 years later the next halving. The other one came as well a couple of months before the halving, is 17. And so, and if you go backwards, previously it was like 64 and so on and so on. So it kind of increased the efficiency, the amount of electricity you need to produce 1 terahash over 1 hour is getting smaller and smaller. So Bitcoin mining is based on thousands of those machines that are connected into the nodes. So there's nodes online. Typically, majority is concentrated in the pools. So there is this companies that aggregate hundreds of thousands of Bitcoin miners, and this is there's like probably 5 or 6 of them that hold about 90% of the market. And then there's a whole bunch of smaller ones, so maybe 80% of the market, and a whole bunch of smaller ones. There's benefits, of course, from staying with the bigger companies, because en masse, basically, more people there is, what simpler it becomes to become that one particular miner that resolves the block. So there is an ongoing process that lasts 24/7, all day, every day, and the Bitcoin network, I don't know if you heard the term difficulty change. So basically what happens is that with more and more terahash going online, and to put it in perspective, around the previous halving it was around 200 exahash, and right now we're looking at 520, 530. So it doubled up in 4 years approximately, the amount of compute power that is dedicated to the Bitcoin. So what happens is that the more people join, the faster the network resolves the problems, and the faster it resolves the problems, the shorten the time. So it becomes 8 minutes. So every Bitcoins are being distributed every 8 minutes now, not every 10 or 11 minutes as it was originally designed. So what the algorithm does, automatically adjust the difficulty of the network to basically bring it again to 10-11 minutes. So this is kind of like something that nobody controls, is the same for everybody, as well as the price. So basically there's Bitcoin price that we all follow, is fair for everybody. Everybody has the same. There's an X amount of Bitcoins you get, and they can either be worth $10,000 or $12,000 or $7,000. You expense the same amount of work, and you likely paid use up same amount of electricity. So you're getting Bitcoins, you're getting the coins, which dollar value is kind of fluctuating. So that is out self adjusting mechanism. The way it works is that the higher your electricity costs, or the least efficient your machine, because it just eats more or it costs more for electricity unit, the more vulnerable you are to the Bitcoin price change, because of course if it hits, it costs more, your dollar value, you're given that you're paying your electricity usage in dollars, less and less like you just got to spend more percent of your rewards to cover your electricity bill, and this is kind of like happening. So right now, for example, what is expected is that the halving is going to come, and from one day to the next, literally from one block to the next, the reward's going to get halved from 625 Bitcoin to like 312, meaning that there's going to be, unless there is a huge price movement or appreciation, if average Bitcoin miner at the moment that is paying an average cost of 6 cents per kilowatt hour and has an average power consumption of, let's say, 25 or 26 joule per terahash, currently is making 40%, 45% approximately on their like monthly Bitcoin rewards, in the sense that their power cost is approximately 50 to 60%. So 40% is what is left after the power is paid. From one day to the next, that thing is gonna become half of it, because all of a sudden, like, they're gonna barely breaking even. But then what's going to happen? The guys that have even less efficient machines or more expensive, they're going to switch off. So if they're going to switch off, the total amount of miners is going to decrease. Therefore, the difficulty is going to decrease. And that's going to like swing the pendulum back to the other side. So it's kind of like, from a miner perspective, around the halving, you're the best if you just have a stash of cash to keep paying your power and being able to weather this first few months, which could be quite lethal and brutal, in the sense that, like, at some halvings, the price ran almost instantly. The previous one, not so much. So it took like 6 or 7 months of struggling. So that's the technical part. And then from the commercial perspective, is I kind of, as I touched on this, like, you're looking to get the cheapest possible power, the most reliable jurisdiction. So you want to be in a place where you're welcome, like Texas, as opposed like upstate New York, for example, when they started banning and they're talking about banning and people using, which is a different. Even though they mine a lot, there's huge mining because of the Niagara, because of the falls and the hydropower that is upstate New York. There's a lot of Bitcoin miners, but it's kind of legacy. The guys that started first in 2015, 2016, it's probably the same guys from Brooklyn, that they were mining there in the first warehouses. They still operate there, but and then you need the efficient equipment, and that's it. The way it works is that typically a unit is consuming. You buy a Bitcoin miner that costs, call it $4,000, the newest generation machine at the moment, and it's going to make for you, at the Bitcoin price of 45,000, it's going to make for you probably around between 370 to maybe $400,000 a month. And then of that, of course, you got to pay the power, which depends what is the rate that you're paying. So if you're in Europe and your electricity is really expensive, it's going to cost you way more. If you're in America, you're in Texas, you're having a decent power cost, you're going to spend way less. So that's the name of the game. At the end, you get your awards every day, every 8 minutes, and it's quite stable. You can see it, like, where you look at different price terms, length, and it's quite stable. It's continuously declining. So over every month, you typically get a point or point half or 1% less than the previous month for the same amount, unless there's like some sort of black swan events, of course, that changes and screw the statistics, which happens. Like FTX, for example, last year, like almost a year and a half ago, when that happened, like, the price tanked to what, 13K or 12K, and like your dollar amount of value was close to nothing. Pretty much everybody was on the red almost in the industry. But then it slowly, the weakest players had to switch off. The network shrinked a little bit, and then it kind of balanced out, and we weathered the storm. It was like 2 months, 2.5, and from February it started being interesting again.
See, that's so interesting to me, like the fact that public perception can just completely change the value of an item. And the reason I bring this up is, like, I mean, I might be wrong about this, but I think about gold, for instance, and I've always thought, in today's world, you hear a lot of talk about manipulated prices, and maybe that's the case in the commodities market. And you probably know better than I would, Mac. But I've always thought, like, an ounce of gold is an ounce of gold is an ounce of gold, and an ounce of gold 100 years ago buys you the same thing an ounce of gold today would buy you. And I might be wrong about that, but like, to me, it's just kind of an interesting thing that, like, the market can just get scared, and now Bitcoin drops in value, right? Like that, like, to me, that's concerning. Help me understand how y'all wrap your head around that concept, or am I missing something?
I think for me on that concept, the more it's accepted, like the ETF, I can't stress how big of a deal that is. Like, just by broadening the audience, bringing more people in, the less volatile it's going to be. So, we might not see these 80% downswings again, just because the market is so small. That's why you see the volatility. As it grows and becomes more mature, I don't believe you're going to see the huge swings anymore. Of course, it's going to do its thing like all other, stocks. They always have the times where they draw down 20% here and there. But with Bitcoin, you're seeing 80% drawbacks. I think with the ETF coming in, this might be the last go round where we see maybe a 50% drawdown. Moving forward, it's just going to get smaller and smaller and smaller.
And that will cut our margins as miners as well, because for that to happen, you need like real, in the Bitcoin industry, there's people that we know, the OGs, as we call them, the guys that have been mining since 2015. So they look at this, and you're making 45% on your revenue, and they're like, fuck, buddy, this is like, it's too late, just forget about this. Like, because they used to making 300 or 400%, that their power cost was 8% or 10% of the revenue that they were generating, or 15. So for them, now it's all point of perception. You know what I mean? I've been in the commodities. If somebody could tell me that I can mine 10,000 tons and it's going to cost me 60% all in to mine 10,000 tons, and 40% stays with me, and likely even keep some of my tons for the future, they might even appreciate even more, I would be like, this is the best business ever. Now, what Sergio is saying with the ETF is so true, because like this will open slowly but surely. It opens kind of the floodgates of much bigger money. So we do expect that it's going to narrow the margins in general for us down the line. It's going to stabilize the market, but it's going to make it, because like, if you think of this, like, you can print your own money and it's legal and it's like everybody knows about it. You know what I mean? And it's and we make and it's a profitable industry. So with players that are not aiming to make 20% a month or 15%, but they would be happy with 10, because they just don't know what to do with the money, like pension funds. And like, once this kind of trickles down into our space, it will it will definitely happen. On the other hand, what I wanted to add as well is that it's not that the fear factor is not changing. I don't know, guys, like, I've been around long enough that I remember like the 2007 and the 2007 and the and previously, I can't remember the date. But I remember there was recessions, and we would have like bad times. Ever since they came up with the idea they can just keep printing more, and that kind of happened in 2008 and never stopped, there's nobody going bankrupt anymore. Like, you can make as many mistakes as you want as a government. You can make really stupid decisions, and at the end, people will pay, in a sense. Like, it could be ECB, European Central Bank. It can be Fed. It's in all the countries. They do the same thing. They just keep throwing in more money to avoid the situation where people come hungry, and like, you know what I mean? Like, which it didn't happen for 15 years. So, I mean, yes, you can say that the volatility is much smaller on the like established markets, but how real is that? You know what I mean? Like, I'm like wondering, like, how real is that there is a market that doesn't, like, it's been like this for ages, that there was always a cycle, and the cycle would have a peak and would have a bottom, and now we just have these artificial peaks basically for last 15 years with small retractions that maybe the the worst actors get washed out, but in general, people don't suffer, and there's no, like, sky high companies closing, like, real recession, that the businesses are closing, the business going down, like people lose their work, and like things are changing. We didn't experience that. So I think for that reason, we did not experience that much volatility in the stocks, in the stock market, and so on and so on. Bitcoin, it's not the case. Nobody is protective over that. That's why it's much more. And as I said, just saying it, like, it's relatively very small amount of Bitcoins that are being traded, and so it's just easier to influence.
Well, to that point, I think I'm a believer that we are 100% headed toward a U.S. Treasury bond default, and our worldwide monetary fiat system is in big trouble. So, if you're putting your money somewhere, please get it out of fiat currencies and put it in something else, whether that's Bitcoin or other hard assets like real estate or, gold, silver. People are big on these days. Some people talk about those going to the moon. I don't even know if I believe that's a thing. Personally, I just think the dollar and the fiat currencies get devalued around real assets, and the real assets just hold their value. And
it's unprecedented pace, that it's happening right now.
Right.
I think it was happening before, but now it's just super fast.
Right. I want to ask one more question, and then maybe we'll pause and we might have to do a part 2 because I just have so many questions for y'all. I'm learning. Hey, if y'all aren't following these guys, is there a place where they can follow what you guys are doing, or where do you want to send the audience?
Absolutely. We're like, you can put in a link in the description below. We have LinkedIn and X, and then we're quite active on the social media. So we'll definitely.
What are your handles? Go ahead and shout them out.
Man, I think it's Sattva Block Co. I'm quite sure. I'm not. I don't know.
Yeah, people manage that for you, man.
There's not me, man. Like, it's not me, but I definitely know we have stuff there, and then we're coming up with the expansion plan right now. So there's going to be a lot of capacity for mining.
But what's the website? Sattva Block Co, right?
Yep. Everything, Sattva Block Co. Yeah, everything you can find there.
Nice. Nice. Well, hey, so before we wrap up, I just one more question, I guess, because I'm a real asset guy. I really like real estate, cash flowing real estate. I'm branching into the business world, and learning from guys like Sergio and you, Mac, who have businesses like Bitcoin mining businesses, for example, that cash flow. So just curious your thoughts on like, okay, I hear Bitcoin is a store of value, probably not a day-to-day transaction type of tool for the public. Excuse me. But as you're storing value in Bitcoin, right? Like, I feel like you're going to be leveraging this to actually put money in real assets like real estate. So what are your thoughts on doing Bitcoin first and then deploying it into other assets versus just investing in other businesses and assets?
For me, I mean, I'll go back to the Bitcoin mining business. For me, my business use case was I could buy these machines that I could depreciate on my taxes that are producing income every month, but I still have write-offs for the machines, and it's making Bitcoin. So that's how I'm producing income, right? So, I just hold my Bitcoins, pay for my expenses, and just watch the value grow. But I've been learning now with the ETFs. Now I can't talk about the ETFs enough. Like, these traders, they're explaining that you can basically put puts and calls on these things and make money every day. And I'm not well versed in it, but it's not like a super risky plan of action. So that's how they plan to make their returns every month and cash flow it. But again, you got to understand Bitcoin is just such a different asset that we've never really had the chance to come across. Your appreciation is just when the price, skyrockets and you get a 200x in 1 year, right? Like in real estate, you're not going to get a 200x for like 50 years or something. But if you get that in 1 year, hey, it's probably wise to take some off the table and go buy some real estate if you want, or, go buy a business. And for me, that's my plan, right? Like as Bitcoin accelerates and okay, let me take some off the table and go buy some things in the US that I know are tried and true, like real estate, let me buy a company, let me do that, because you can't have all your eggs in one basket, right? Like if you're a true investor, businessman, you don't put all your eggs in one basket. And for me, that's why it's like, this is a really good savings tool for me. Like if I've got cash that I'm not doing anything with right now, I'm going to put it in Bitcoin because I feel very confident it's going to if you look at Bitcoin charts over a 4-year period of time, it's never down, right? It might be down 1 year or something, but over a 4-year period of time, it has never been down, ever. And it'll probably never be down. Mm-hmm. So if I can accumulate these coins and just hold them like in my savings account per se, like I'm not using it anyways, I have to have a nest egg. Like, let me help my nest egg here. It appreciates. Okay, I got a 200x this year. Let me take some off the table and go buy a business now and run that. Or, like I said, when I get real loans on these coins, like it's going to change everything for me. Like right now, I don't see my home as like a personal expense. I see it as a business expense because I've got equity in my home and I'm not taking it out because I just need it for everyday use. I take the equity out to go start a business. Mm-hmm. So that would be what I would do with Bitcoin at that time. Like, okay, now I just got all these coins that I don't really want to sell. Like I want them because I believe they're going to keep going up. But yeah, I do want to get a loan on them so I can just go, again, diversify. Let me go buy a business or let me go buy some real estate or whatever the case may be. So for me, that's how I see the generating cash flow point of view. Mm-hmm. I don't know ideas on how he would.
Yeah, I just wanna add on top of this, maybe from an angle of a business owner in that space as well. For me, what is really appealing and what we do is that it's kind of a foray and a fast track to data mining as well for us, in the sense the infrastructure that is required to teach and train the AI models. It requires a lot of power and requires a lot of cooling. So the basics of the business, which is make it or break it for us, meaning we need to secure the power at lowest cost possible and sell it at higher cost possible, be it for self-mining or because of the customers. I think it's a very interesting and very relevant for us point, and we're actively as Sattva looking into developing the second leg of our business, which would be data mining, basically leveraging out everything that we've done already in the Bitcoin and just placing different type of computers in very similar environment. And I think that this is this is like an interesting point because it's kind of interlinked. Like, there is an expectation of the AI and high performance computing market to grow at double digits for the next 7-8 years. It's already happening. It's already happening, but it's going to become even more. And being Bitcoin mining allows us to kind of as well be part of that game. So from a business perspective, it's being in mining and if it's mining Bitcoins or it's mining data, at the end of the day, the basics of the business is exactly the same. So we're trying to expand to this as well.
Awesome, guys. Well, thanks for joining me today. This has been fun. We're gonna have to have you back for round 2 so we can learn some more about Bitcoin and the crypto world. If y'all aren't following these guys, we'll drop their handles down in the description. If you haven't yet, go grab some gear, support the show at goleadeverything.com/gear. and make sure you subscribe to the Phil Swanson YouTube channel as well. If you're investing, make sure you are not investing in fiat currencies and you're putting your money somewhere. That might be Bitcoin, might be a good play. I'll leave that up to you. And as y'all go, lead everything.
Thanks so much.